Hey, what's up, everybody? Welcome to the Real Estate Reserve podcast. I'm Jason Balin from Hard Money Bankers. Ian Horowitz is across from me from Equity Warehouse. If you're tuning in for the first time, welcome. We truly appreciate your support. We promise we will make this entertaining and fun for you, and you might even learn something as well. If you are a past follower, listener, thanks again for the support. We certainly appreciate it, and we promise we will give as many nuggets as we can. So we have a guest today that we're going to bring on here, and Ian's going to introduce in a second, that I'm pretty interested to learn more about and hear about. He was a fireman that turned into a full-time real estate investor with a debt-free portfolio. I think that's something that a lot of listeners and a lot of real estate investors in general would like. They want to either quit their W-2 job, or they've already quit that, and they're trying to do real estate investing on a more full-time basis, and eventually get that thing debt free, and in essence, take out all the profits and have a lot more cash flow. So we'll learn a little bit about that here in a second, Ian.
Yeah, definitely excited to bring in one of our mastermind members, Dan Smith. We met him at some other events. I'm super excited to bring him on here in a second and talk about his debt-free journey of building a real estate portfolio. But more importantly, you guys get any value from this, please feel free to share it. Give us a like. That's what keeps us motivated. We love seeing the viewers. We don't do this for money. We do this to talk to real people that are just like us, that are doing real estate, not gurus, not anyone trying to sell you anything, just someone that's doing real estate the same way we want to do real estate. So with that being said, let's bring Dan Smith in.
Hey, Dan, how are you?
Good. How are you guys?
Doing great. Well, welcome to the show. Why don't we just start off, maybe just give everybody a little background about yourself.
All right. I was a firefighter for about 12 years. I was investing before that. I was just buying little houses, trying to pay them off as quickly as possible, and hurt my back about 2 years ago. And thank goodness I was doing real estate. I could kind of transition from having back surgery to just going full-time into real estate. I'm married, been married for almost 25 years, got 3 kids, and just enjoying semi-retired life.
Yeah, man, that's the ultimate goal. It's funny, you go into a career, and Jason kind of knows this, doesn't know it, but he's heard me talk enough about it, is you go into this career thinking you're going to do 30 years. I'm going to go be a fireman. I'm going to help people out. And very quickly you realize it's a young man's game, and we're not even that old. It's a very young man's game. At a moment's notice, you can get hurt or killed, and you're out of the game. What led you to start buying real estate early on during your career as a fireman?
I actually started even before I was a fireman. I've always loved real estate. So when I was a kid, I had a lawn service, sold it, went to college, and, sitting in the college dorm room, and Carlton Sheet pops up on the TV, and I buy his course, and just knew nothing, didn't know what title company was, didn't know anything. And just started kind of learning. And that's kind of the way that I even started, was just his whole mindset was you buy 30 properties, put them on 30 years. After 15 years, you sell half of them and pay off the other. So that was kind of the mindset that I had. And I just started buying little houses as cheap as I could and fixing them up, and then just start renting them. And so that's kind of how the whole, not having a lot of debt started, was I just bought the cheapest, little ugliest thing that I could. And then it just built. I was able to scale quite a bit when I got into the fire department, because, we worked 24 on, 24 off, 24 on, 24 off, 24 on, and then 4 days. So I was able to go out. I did a lot of work myself, did a lot of the hands-on until I hurt my back. And so it just kind of went well being a firefighter. And as I started seeing, kind of like what you said, firefighting's a young man's sport. And, I'd love to say that there was a huge camaraderie within the fire department, and they look out for you, but they don't. They're about taking care of their budgets and things like that. And so that was the thing that I'd tell rookies when they come out: start buying a house, live in a duplex, live in one side, rent out the other. So I really started seeing it after about 3 or 4 years in the fire department. And I was like, I've got to make plans outside of this career because I don't know that I'll be able to make it. And then lo and behold, I ended up hurting my back.
Let's talk a little bit about the first deal that you ever did. I'm assuming it was in Chattanooga, Tennessee, where you live.
Yeah, just outside of Chattanooga.
And tell us a little bit about that one. Like, what type of property was it? How did you find it? How did you finance it? And potentially, where the status of that current one.
So it was actually, I was in college and I was listening to Carlton Sheets, and I ended up buying just a single family house. 3 of my college buddies moved in with me and I lived there for free. How I found it, I just called a realtor. I didn't know any different. This was 25 years ago. I just called a realtor. We started looking around. I found this one, made sense. My buddies could pay me, I think it was $300 a month, and we could cover mortgage, taxes, insurance, all that kind of stuff. The first actual deal, which was that one, was I did an FHA loan, and my dad co-signed with me, and I ended up borrowing the down payment from a credit card.
Dude, that's like straight old school guru stuff right there.
Carlton Sheets style, baby.
Yep.
Yeah. No, I mean that's the way it should be. That's a good barrier to entry to get into your first deal, whatever it takes. OPM, right? Other people's money on some of these things. Yep. People hear other people's money and then they hear, well, why would you borrow from a credit card? That's irresponsible. It's 20% interest, whatever it is. It's like, who the hell cares? It gets you into a deal that potentially pays out multiples of that.
The first time I ended up having a private lender was a buddy. He was a realtor, and I said, "Hey, will you go look at this house?" I was maxed out. I'd used the banks. At the time, you could still get fix-up monies from the bank. I went to him. I said, "Hey, would you be willing to partner with me?" And he said, "Man, I'll do one better." He said, "How about I finance this house for you?" And I was like, "Oh, that sounds sweet." But I had no money to do the fix-ups. So I actually borrowed $18,000 off of credit cards. I used 4 different credit cards, fixed it up, sold it, paid off the credit cards, and ended up, I think I made $18,000 or $25,000 on it, somewhere right in that range. But
it's a lot of money.
I did what I had to do. Honestly, I talk about this a lot to people is, there's so much information out there now. Like with these podcasts and everything else, masterminds. Man, when I started, it was Carlton Sheets and William McCorkle. And once you read their course and listened to their tapes, it was done. There wasn't anything more, so you had to just kind of go out and figure it out. And that was the way I figured it out.
What was the median like buy price, like as you start building this rental portfolio, just to give people a frame of reference, what it was then, and what do you think that same house would trade at today?
Well, I'm actually got one under contract to sell. It's a flip. When I started in this same concept, 3-bedroom, 1 bath, 1.5 bath, 1,000 to 1,100 square foot, split level, walk in, got kitchen, living room, walk down 5 stairs. There's a basement, walk up 5 more stairs. There's 3 bedrooms, 1 bath. 15 years ago, it was $30,000 to $40,000. I paid $121,000 for it.
Oh, geez.
So when I was selling back then, I was selling for $79,900 to $99,900. I just put this one under contract for $289,000. So exact same house, but that's literally from 15 years ago to now.
Yeah, things are a little bit different. Ultimately, that's what chased us out of the market or made us hit a pause. But it was hard to navigate those bumps as they were moving up in price, because it was like, oh, well, rent's not really following, or sales prices aren't really following. Like, why is stuff trending upwards? How did you cope with that as, you're going through it? Do you take the time to underwrite each deal individually and try to block out previous deals you've done? Or, have you had mind fucks where you're just like, I can't do this deal because I'd only pay $40,000 for this and I can't get out of this cycle?
This one was very, very scary to me. I took a lot of time to underwrite it. I called my realtor and I'm like, hey, do you really feel like this is going to sell? She told me 265. And I said, there's no way this thing was only worth 130, 140, 5 to 10 years ago. And she said, Dan, she said, I've got comps, I've got all this. So I've actually been, and we've passed inspection, appraisal's done. And so it's at a point now that I'm like, okay, it is what it is. I mean, their prices are not going down. It's in the price per square foot. So you just have to adapt, with the changes. But I think no matter what, I was in it still really good. And when I first started, my whole concept was, what's worst case scenario? If I buy it, I can't flip it, I can rent it. So even with this one, I was in good enough that if I had to, I could refinance it and I could just rent it out and I could cash flow on it in worst case scenario.
Yeah, good point. Good point. Because I think a lot of real estate investors don't have a backup plan, or they don't have multiple strategies. And if you've been in the game long enough, you've seen these areas that have skyrocketed in value, and you kind of have in your head that's like, they got to go down, but who knows? Like, who really knows if they're going to go down? Like, I believe that they're going to go down, but I don't know if that's, but I don't know. Like, part of me wants, I think we kind of want stuff to go down, not our current portfolio, but like, have buying season and opportunities, but like, who knows? Like, the market's given us chance, things have given the market chances to go down, right? Higher interest rates, COVID, things like that. And it never has, but
it hasn't.
But statistically, there are cycles. So who knows what's to happen? But I'm in the same boat where it's just like, I'm not buying or lending on this project. This neighborhood was worth $100,000, 10 years ago, and now it's $300,000 or whatever the case is. So it is definitely like a shock that you kind of have to overcome for good and bad. I mean, here's the other thing though. You do kind of, the longer in the game, you learn from past experiences, right? So if folks that are in the game long enough and they've seen multiple cycles, they know it's like, hey, it went to here, then it went back to here, then it went to here, then it went back to here, then it went to here, then it went back to here based on.
I mean, I went through 08, 09 and 10, when everything just tanked. I mean, it was.
Me too.
It was crazy. And I had to rent several of the houses that I had. And, but like I said, I've said this to a lot of people, you make money when you buy, you don't make money when you sell. Sure. And I mean, most investors feel that way is if you buy right, and the thing is, the other thing that so many investors, especially new investors do is they want to get in the game so bad that they're willing to buy something that's not good. And it's kind of where I'm at. I mean, the only thing I've bought really recently was I bought a storage facility, but I've been working on it for 3 years. Besides that, what I'm doing now, I'm not buying as much. I'm actually tightening up a lot of my operations. And I'm also doing some of the rehabs, just focusing on rehabs to where I can take advantage of the rent bumps where I was renting stuff for, and you guys will laugh hearing this, but I mean, I bought a 20 unit they were renting for $500 a month for a 2-bedroom, 1 bath. I'm going in remodeling them and I'm going to $1,100 to $1,150. So I was cash flowing when I bought. Now I'm going in and fixing up and I'm just doing it. I'm not kicking people out as it just natural attrition as people move out, but we've already got, I think 7 or 8 remodeled. So our cash flow has gone up by $5,000 a month just by doing that. So that's kind of where my focus is right now is not doing huge amounts of acquiring. I mean, if the opportunity comes along, I'm going to do it, but I'm really focusing on operations and then bumping my rents.
Yeah, that's a really good point. Concentrating on what you already have and fixing what you have. I mean, let's just use your example of that 20-unit building. You're renting for $500 a month. How much are you putting in per turn, you think?
We're doing extensive. We're actually going in and gutting and fixing floors, all new heating and air. So we're probably on average about $15,000 a door.
All right. I mean, that's still fair. You're getting $600 more per month in rent. 600 times 12, 7,200. I mean, that's a 50% return on your capital. In 2 years, you recap all. It's a no-brainer, right?
Yeah.
And you talk about trying to deploy and find new deals and get 50% return on your money. I mean, unless you know where to find it, let me know. But I mean, that's the best use of your capital. And I think that's also a great segue into you building a debt-free portfolio to have free cash flow to do this, right? Like if you were all levered up and debted up, and we know some similar people that think that way, and I think that way sometimes, but sometimes it's not a good place to be. You don't have the free cash flow to go and fix and do this, and you got to go back to the bank and borrow money. Now your returns get tanked. What was your thought process just behind, like, okay, I have to be debt free? Like, was it something internal, or was it like the guy that I followed, Carl, he just says this is how you have to do it, so I did it? Like, what led you down that journey of being,
I think for me, when we started, my wife and I started in real estate, we wanted to have cash flow so that we both could quit our jobs 20 years ago. And so to me, the simplest, quickest way to get cash flow to replace my job was to pay off that property and have the full monthly rent coming in. I guess I didn't have the mindset of buying 30 properties and having $200 or $300 a door. I was like, if I had 10 and they were paid off. So that was kind of the whole mindset that I had at the beginning. So I just, every bit of money I had, I put into paying them off. And then I guess, when you go through 08, 09, you're like, oh crap, the banks aren't loaning. They're not doing this. You get stuck with a loan. And then, we hit the high times during COVID, and I felt like we were going to kind of hit some tough times again. And I guess I call it pillow time. I can have easy pillow time. I mean, and at this point, you say debt free. I'm not 100% debt free. I did sell off some apartments and was able to get out of debt, but then I got into storage, and I sold out of that portfolio. So I bought some stuff, and I had to take on a little bit of debt, but it's probably 20% for my whole portfolio. So maybe 25. But I feel, and all that is private. There's no institutional lending at all. It's all private. And I just feel better with it.
Yeah. And I agree / commend you in that particular case. And I think it's opposite of what a lot of folks do, for better or worse, right? There's no right or wrong. And the model of owning a portfolio the way you do is it doesn't happen overnight, right? It takes time, right? If you have, $100,000 in cash, you can buy one property for $100,000, or you could buy 10 properties or whatever with $10,000 into each of them and leverage them up. And which way is better? Which way is worse? And, typically if somebody's in the actual growth stage where they want to scale, grow as quick as possible, you need leverage, right? Leverage is your friend. Leverage is a tool, but it also can hurt you in the wrong times if you do it the wrong way. So I think it's a personal decision. I know folks that are very into leverage and scale, and I know folks that are just like, hey, I just want to do it my way, slow and sweet and cash. And there's no right or wrong. I mean, I'm a little bit more on your side than the leverage side. That's just kind of my appetite, and you're comfortable with it. I mean, I know a lot of folks are like, why would you ever pay off your primary residence if you have a 2 or 3% mortgage? And then on the other side, it's lend out the difference or buy something with a difference, keep the arbitrage, and absolutely right. There's I'm not stating they're not, you're not right in that case. And the other side, it's like, well, then you don't have a mortgage payment, and then you have peace of mind. Then you have a free and clear asset, and you can choose to do what you want with it. So there is definitely two mindsets. And also, like you said, it frees up mental airways to concentrate on other things, right? You don't have that burden in the back of your head. It's like there's a breath of fresh air when that happens. So again, but there's, anyone can have this argument and go in any direction that you want. And I see all sides of it, but it's whatever.
I absolutely do too. And Ian knows, I mean, it's a conversation I've had with him and several other people many, many times of, almost feeling like I was wrong. And then I did leverage up more when I was buying storage. And then when my business partner bought me out, it was like a breath of fresh air. And I was like, nope, I'm doing it the way that I need to do it. And, another guy had said one time to me, he's like, Dan, run your own race, what you feel comfortable with, and the thing is, I am a little bit older. a lot of guys that get started are younger in this because I did it the way I did. I'm 46 years old. I've been doing this for 25 years and, I'm okay where I'm at. I've got a 20-year-old son. I've got a almost 18-year-old son that I'm wanting to kind of help guide them and help them. Where I'm at, I'm good. I don't need to just scale and scale and scale and scale. But I agree. Leverage, you've got to have it. If I didn't have those banks at the beginning, if I didn't have private lenders, I couldn't have done it. So you have to leverage. And, when you get started, it's hard.
Yeah, I would definitely agree. And that kind of goes to a conversation that we were having yesterday in regards to imbalance and balance in general. It's the same thing. You have imbalance in your life because you're trying to grow a business. So your business takes forefront. That creates imbalance. You can't be perfectly balanced. Later on in life, your business is built. Now you spend a lot more family time. And there's balance anywhere. It's the same thing with debt and leverage. At some point, you're going to need potentially to borrow money. Yep. There's a time and place to use it. And then there's a time and place to take your foot off the accelerator and feel comfortable. You're obviously going into a stage about to be an empty nester, I presume, based on that comment. That's like, yeah, it's you and your wife's time. You don't need to go out and grind and have to work like crazy. And you're like, all right, I can take my foot off the accelerator. That's your choice, right? You've made it to that time where you're like, all right, I'm going to enjoy some of this. And I think that's perfectly fine. And you need to recognize what works for you and your situation. So I would say I commend you as well to have the maturity to even think about that. Most people are like, oh no, I made my money and I just got to take my foot off the accelerator now. It's like, no, dude, you made a little bit of money. Now make that money continually come in. And by you building a debt-free portfolio or majority super low leverage portfolio is probably a better way to portray this, that you have a cash flow that will not stop coming in and you don't owe anyone except the goddamn tax man. And that's the last thing you need to figure out how to get rid of. And you're golden, right? So,
and I think here's the other thing on it. The strategy has to be aligned with your end goal as well. Like you can't be like, hey, I'm going to have $100 million in the next 10 years. It won't work. Right.
Right. Absolutely.
Right. If that's what the goal is, it's like, yo, you better be leveraging everything to the top.
Correct.
and bang, bang, bang and do it that way. So,
and again, I think where the hardest thing as an investor, when I started, it was like, I want to grow. I want to do all this stuff. And then all of a sudden you do hit a certain amount of success and you're like, okay, since I retired 2 years ago, I've been processing in my head, okay, what do I really want? And that's hard for an investor to step back and say, okay, and maybe not enough's enough because I still want to grow. I still want to do things, but I don't have to have the gas all the way down to the middle. I can kind of just cruise because of what I've done for the last 20 years. I can enjoy it and I'm okay. I'm not going to be 100 million guy. I don't want to be 100 million guy. I'm fine where I'm at.
No doubt.
Again, that's maturity and planning hard at work, right? And recognizing what your values are and what's important to you. And most people, people make fun of me because I have my eyes set on a jet, but I have my eyes set on a jet because it's an unobtainable goal that I'm trying to achieve. But in the end, we all have core values that we're looking to satisfy. And, somewhere along the way, the foot's going to come off the accelerator, right? We all go through seasons. And I'd be interested to see what happens. I know you said you're headed out to Alaska for the week. You're gone for a week here. I know you're coming to New Orleans to the event. You're gone a week there. And next thing you're like, man, I'm doing a lot of life stuff. I need to get back into the business mode. And we all go through these cycles. There's no clear cut, hey, today's business and today's life, it's all right. It goes in phases and we're all there. We're all mentally tired of something and it happens. So, yeah, man, I think that's really cool.
And here's another thing that I think is something powerful to think about is time is not on your side, but time is on your side at the same time, right? The compounding, when you compound your knowledge and you compound your cash flow and you compound interest and things like that, turns into a big thing, right? You're 6 years older than Ian, right? So think about it. Think about how much success certain people have had over a certain period. And then it's like, just keep adding more time and more time and more time and more time to it. And again, it's one of those things that if you ask some people, it's like, well, time's not on your side. You got to do everything right now. You never know. And I don't disagree with that either. But then at the same time, you know, I think a lot of people are envious of others that potentially might be older. And it's like, think about where you were 10 years ago. Like, and think about where you are today. Like, that was a long time ago. Like, think about how much somebody has accomplished things. Imagine, you know, a snowball grows like this, right? So if like 10 years ago you were here and then today you're here, tomorrow you're gonna be here, like just doing nothing else besides just keeping everything slow and steady. So, you know, I personally get anxiety sometimes, when there's big goals that are in place and it's like, man, like, how am I going to hit that? Right? Like, that's going to be tough, but really it's just block and tackle every day, doing the right, proper things that will accomplish that. But it's hard to think out into the future. It just is, right? Because it's a lot of things just seem unobtainable. And I'm guessing when you started this, I guess you were 21, right? When you started this, compared to where you're 46, that of course seemed unobtainable to you at that time.
Yeah. I knew nothing, I knew nothing. And, my goal at that point was I want to be a millionaire. And, I didn't have the first clue, didn't know anything. And then, the first time that I realized that I had $1 million in assets, I was broke as a joke, didn't have anything. And I was like, crap. I mean, I showed it to my wife and I was like, this is what our financial statement says. She said, yeah, have you looked at the bank account? And, it just, sorry, my mind just went blank there for a second. Getting to goals and getting to the point that, you can be content and enjoy. And I think it's huge. I think going from $1 million, that's the hardest thing, is when you start out and get going, it's one of the hardest things. But once you get into it, then it just becomes every day and you just kind of roll with it.
Yeah. Well, and I'm sure that ding was nobody ever dings you to say hi. So I'm sure your ding on your computer interrupted your thought. And
it did.
I'm sure it was a good one, because we all have real estate. It happens. But you remind me, and Jason tells me this shit all the time. Sam Zell, if you ever read his book, Am I Too Subtle? He talks about having billions of dollars of assets. It does not know if he's going to make payroll on Friday, which is just mind-boggling, right? But again, this is that whole imbalance of the guy was destitute to build something gigantic, starts one of the first REITs in the country, and he's so imbalanced that finally, when the payday came, the imbalance switched around the other way, and he talks about how he traveled the world on motorcycle and all these other crazy stories, right? And that's the same thing. And I think a lot of people get caught up, oh man, like I remember my first catch up was like, man, I just want to get to 100 houses. I didn't give a shit about cash flow. I didn't, obviously it was important and I said it was important, but like, if you asked what was more important at that time, it was more important for me to get to 100 houses than potentially sometimes worrying about what it is. Oh, it's in the same area, whatever. It's a few bucks less. Well, a few bucks less turns into a problem really freaking quick. So we've all been there. And I think with business maturity, it comes along. And Jason mentioned it. The hardest thing to leverage, it's easy to leverage money, but leveraging time in the sense of trying to speed up your business is almost impossible. And having those experiences and taking that path to getting there. So, man, it's just a different world, and every day is a different step. So
what are some kind of future goals that you have on the horizon related to, obviously business goals? Are you sticking in with the asset classes that you currently have? I noticed you said, you bought your first storage facility. You're trying to buy storage stuff. Are you trying to venture outside of your home market or stay local?
I'm definitely staying local. I won't go outside of my local market. I just feel very comfortable there. I did sell out of a 10-unit storage portfolio last October. And I was kind of like, I'm not going to get back in it. But 3 years ago, when I first started, I was actually talking to a guy. It was the first guy that I ever contacted local where I'm at. And he called me about 6 months ago and we worked it out. And so I'm probably going to actually fix it, get it stabilized. And I think I'm going to actually flip it. And I'm going to use that money and I'm going to probably start doing some, just private lending off of that money.
Nice. Yeah. Again, it comes back to having a plan, man. That's smart. And you took a situation that was a little rough for you, and we can do another show on that at a later date. But you recognize that your values didn't line up with your business partner, and you were able to make a separation, even though you guys had 10 storage properties. You had quite a bit of square footage, and built something and amassed it really quick. So,
about 18 months, we had 1,100 doors and I think it was 400,000 square foot.
Yeah,
so all in our local market. I mean, it was all within an hour of each other,
nice.
Which is kind of unique.
Yeah, no, that's awesome. And then since then, so you've obviously freed up some time selling that. You've started a podcast with your wife. You want to mention that?
We did. We started what's called Happy Home Tennessee. It's just kind of talking about our story, kind of where we started as a couple. A lot of times, you see individuals kind of getting into it, but kind of once again, we started where I was hands-on. I did a lot of the work. I did a lot of the management. We still self-manage all of our real estate portfolio. So she's still very involved. She does a lot of the bookworking and that kind of stuff. So we just kind of started talking as a couple, where we started from and the highs, the lows, even down to what we're doing right now is we're restructuring so much with our organization of just, we lived out of a milk crate, just to make it simple. We lived out of a milk crate, followed the Dave Ramsey philosophy on rental properties as well. And we realized that it's time to make that change. So we're doing a lot of structural stuff, but it's just really just being open and honest with people, the highs and the lows with our podcast. We're, just trying to help young people that are, especially couples, that are struggling in that 8-to-5 job, barely making ends meet. If it's nothing more than just buying a couple of houses that help them in retirement, if it's, they need money for college for their kids, whatever it is, it's not necessarily going out and being that $100 million person, but it's just changing your mindset and seeing that there's other options out there than just that 8-to-5 every day.
Hell yeah. I mean, that's how we all started, right? Just, hey, we wanted some extra money for retirement. Next, it spirals out of control into a really good thing and changes life, changes trajectory. So awesome. I've been following your content, really good video content that you guys have been pumping out too.
Thanks, man.
Terry, you're right. You do call to say hi. I will give you credit. You do call to say hi. And sometimes I don't answer because I'm not in the mood to say hi. So I will give you props there, buddy. Hi, how you doing?
Terry's got an updated. Terry's got an updated Facebook picture too.
Yeah, is that moving up in the world, man?
I didn't know that was the same Terry Royce.
Yeah, he's the family man, babe. Hey Dan, so we like to ask all of our guests this one question. Besides the meaning of life, what is one book or podcast that you're either listening to now or you think everybody should, go out and read or listen to?
Man, book or podcast? Since Terry's on there, maybe I should plug his. No, I'm just kidding. Honestly, old school. The Millionaire Next Door. I know it sounds so funny, but I loved that book. It just, I guess, kind of grounded me a little bit in, the aspect of you don't have to be flashy. Take care of your family, be simple. A lot of young kids, I recommend that too. And I know it's a little old school, but I love that. Podcast, honestly, man, I love getting on yours. I listen to John's new one. Just guys that are just real. Those are the ones that I love to listen to, not somebody out there, part of REITs or anything else like that. I just very basic, simple guys.
Yeah, I mean, they're the best ones. I like listening, hearing other people's thoughts, and we're obtainable, right? Like you can reach out and say, hey, man, I heard on your podcast, what's up? Like we were talking about infinite banking and some other stuff, we've talked about it here, and it builds relationships for everybody else. And again, that's why we like interviewing guys like us, not gurus, not people that are trying to sell stuff. Dude, nobody gives a shit. Like you can go online and get sold. Let's hear from the real people doing real shit.
Yeah, there's education and content everywhere, and it's all free. And
I think there's so many different options out there. I mean, like you said, the guys are going for the 100 million, the guys that are just wanting to get a little extra cash flow, and you have to be comfortable in your own skin. Being a firefighter, you got to have thick skin. You got to be comfortable where you're at. And I think that's a big thing is just being comfortable. And, when I started hanging out with some of the guys in these masterminds where I met Ian at, I mean, I was intimidated. I felt like, man, I'm way behind the 8 ball. I'm not doing the right stuff. And what's been awesome about it is the last 2 years, it's allowed me to realize that what I am doing is good for me, and just accept who you are and accept where you're at and just roll from it, but learn from other people, because I mean, Ian's brilliant, and I love to learn what he knows, because he's in a whole different realm than I'm in.
Yeah, no, good points. Everything was good points besides his brilliance. But also the relatable factor is
he's a firefighter, man. Yeah. He's pretty smart for a firefighter.
Yeah, well, that is a fact.
He is pretty smart. I will give him credit for that. But again, to sum what you kind of just set up, it's whatever you're relatable to and what makes the most sense. I mean, the down and dirty, real podcasts, books, masterminds, groups, interviews, things like that. That's what people want to hear. What's relatable. Hear stories. I know, Ian's friendly with a lot of folks like you, a lot of ex-firemen, current firemen. And I mean, that's great, because it's like, hey, if he can do it, I can do it, right? Like we all want to relate to people similar to us, and people that are open to share. So yeah, this has been great, Dan. Obviously, certainly appreciate it. Where's a spot that everyone could reach out to you if they see fit?
HappyHomeTN.com or HappyHomeTennessee.com.
HappyHomeTN.com. Okay, cool. We'll put that in the show notes. We'll make sure we put that in the comments.
And then we also have our podcast, which is Happy Home with Dan and Latang.
Perfect. All right, we'll put that on the screen. And
cool.
If you're listening on audio, make sure to check that out. Obviously Dan seems to be a pretty upfront and relatable person, so I'm sure he'd be happy to help anybody listening with anything that they need. Again, Dan, thanks again. If you're listening or watching and you enjoyed this episode, we really, really appreciate all the support. This podcast has grown a lot over the last few years, and we couldn't do it without our loyal listeners or followers. Feel free to share it with a friend, like, comment, subscribe, whatever platform you're on. And again, we really appreciate it. And we'll see everybody next week on the Real Estate Reserve podcast. Take care, guys.
Take care.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.